So we had oil yesterday.
Yeah, natural gas.
And we get natural gas on Friday this week. So we get inventories coming out in about 10 minutes, 10:30 a.m. Eastern time. We get the natural gas contract up here trading 284.10. And let's take a look at some of, I'm going to jump off crude oil. We'll jump back into natural gas. So we'll take a look at some of the possible trade setups you can look at ahead of the inventory numbers from the EIA coming up. So start things off with the 11 a.m.s. And if we're going to look for potentially a two-legged trade, right? Buying a bullish
volatility
spread.
trade, yeah.
Yep, buying a bullish spread, selling a bearish spread, so you have exposure to both sides. 11 a.m., you're going to have 285 as kind of a pivot point, which is not bad.
Not bad.
Before we get into the real numbers, I'm just going to jump around, and this is what I would do if I was trading this, and just see where these points line up. So right away, okay, so noons have same exact prices. That'll be good. We'll get to basically just see what that hour is going to cost us. And the 8 a.m. till 2:30, that's really not going to work. Now, it can work if you just want to trade directionally, but because 280 is going to be our point, we'd have to buy the 280, sell the 280, just be really out of the money. You'd be paying a lot of intrinsic value for this bullish spread. But let's see how the dailies. Okay, and so the dailies are going to have the similar. So realistically, you have your 11 a.m.s and your noons if you wanted to make a volatility trade on both sides. So start off with the 11 a.m.s. This would be your bullish spread. You'd be buying the bullish spread. This would be your bearish spread. Now, the bearish one's going to be where your intrinsic value is, right? Because you have about a penny of intrinsic value, which is going to represent about $10 in this contract. So not bad, $22. No. And you can see the difference in terms of the bearish spread being more expensive.
2.2 pennies.
Yeah, 2.2 pennies away from 285. And if you get downside movement, you already have a penny of, you know, head start to the downside. So you don't need much, but again, that's at 11 a.m. So the numbers coming out at 10:30. You only have a half hour really of exposure. And then let's jump to the noon. So what's nice here is that same exact price points. You'd have 20 cents of exposure to the upside, 20 cents of exposure to the downside. And looks like they're pretty similar. So 285.7, that's going to cost you basically a similar $7. 16, so 23. So about 2.3 pennies.
Wow, that's only $1 more. Oh, it might have moved a little too. Because we were at 2.2 and 2.3.
No, it's basically 284. You can see right here. I mean, that's it's been ticking at 284.
So that's well worth it.
Yeah, I would agree.
Yeah. You're talking about, what, 1/10 of a penny, really. Yeah.
Yes, definitely. So, you know,
that's sweet.
Pretty little, pretty small amount of premium.
So they're not expecting a lot of movement here, then.
No, right.
Yeah, right.
I would agree.
Yeah.
So we got about 7 minutes until those numbers break out. Either way, you'd be looking at about 2.5 pennies of movement.
Let me bring
away
up
from that 285, and we'll see what happens.
Bring up that contract and see what. Look at that. Okay, so CRB. Is that the same contract we're dealing with too? The Qs.
Go ahead, too. I believe it is, but let me just jump back. That's August. Yes, it is August.
Okay, cool.
Yes.
Oh, so this is, look at the volatility on this thing, man.
Yeah.
5 days.
We're just at $3,
yeah.
right?
That's a big number. So let's take a look.
Because I believe it was last week doing the natural gas numbers on Thursday. We were trading at 301, I think, and by the end of the day, we were trading, I think, at 291.
Yeah, you know, I can see, you know, I put this up on a 10-minute bar, and I can see why the market thinks that, you know, this is going to stay kind of flat. You know,
and why do you say that?
It's been volatile, but, you know, on a vacation week, a Friday, there's not really a lot of hints in there how someone's trading that this morning.
Okay.
You know, so it's almost like flattened out, like, okay, everyone's at the Hamptons down the Cape,
it's
or
possible,
wherever they are.
It's possible.
You know what I mean?
I'm just going to back this up a little bit further to get to last week's, and that is, let me just make sure, June 28th, and I believe that is going to be. It sure is. So there was, and that's what I had remembered. So there's last week's inventory number. So we're trading at 301, and pretty remarkable. By basically 1 o'clock, we were trading at 293, 290, 280. Pretty remarkable move last week.
Oh yeah, big time.
And then it's just been quite a steady move down. So we'll get those numbers at 10:30, and we'll check back in and see what happens.
Welcome back, folks. So we have EIA says U.S. natural gas stockpiles rose 78 BCF, and they were thinking for 76 anyway, right?
Yeah, so pretty close in line. There's your headline number. Inventory is rising 78 billion cubic feet for the week. They break it down region by region, but bottom line is expectation was about 76, comes in at 78. And to jump back to the chart, we saw natural gas diving a little bit lower initially on that news. and getting a bit of a bid, but you can see how fast this moves. If you're making these types of trades, you might want to have your orders already in on one side or the other. Because as you can see, I mean, that spiked down to 280, 274. We're now a solid penny above the highs. The whole trade was only costing us 2.5 pennies.
Right.
And man, we're already back to, you know, I mean, quick moves for sure. But if you were making that volatility trade, you would want downward action only because we had a penny head start, right? 285 was going to be our pivot point where I have my mouse now, as in you had exposure to the upside and downside from that level. And we're trading about 284 coming into the news, and we got a little bit of a spike lower. So, but it was nice pulling that up ahead of time where you really got to see the 11 a.m.s versus the 12s, and how you're right, there was very little extra volatility. Not even a penny. It was like a tenth of a penny. That's it, right? Which is a tick, you know, in this market.
Which is huge.
Yeah. It's huge how small it is, right?
Right.
Right.
For an hour, give me a break.
Right. No, I agree. And, you know, if you follow our program, if you just follow these markets enough, man, the price action does not stop at 11 a.m.
No.
As in very often, whether it's crude or natural gas, and crude really rocks, you know, in terms of volatility-wise. But natural gas as well, you know, as in going back to last week on that natural gas movement, on the numbers, there was big action between that 11 a.m. and 12 noon hour. So we'll see. We'll check back in, but right off the bat, down about a half penny from where we were trading at prior to those numbers coming in. Pretty close to in line, but you see a little volatility. We'll see if we get some negative action. I mean, the trend has been downward in natural gas, and so first move is downward. We'll check back.
Welcome back, folks. So natural gas, we're gonna spin both ways here, but we're still at that 284 number.
And this is where it's good to get used to these types of trades. You know, you can always download the demo account, get used to it, because as we've seen, we're coming into 11 a.m. We weren't going to have to pay that much more in premium for the noons, and we're still getting a lot of volatility. And it would have been a shame if you're capped out at 11 and you're flirting with your max loss position of 285 right now if you're taking that volatility trade, but would have until noon for not much more money at all, $1 or $2 or tick or two. But yeah, just under 285 currently on that natural gas contract.